Hello everybody, thank you so much for being here with me today. I really appreciate your time and your attention throughout this video. I'm Kathleen from Wondrous Wealth and I help digital nomads, location-independent entrepreneurs, online business owners with their international tax strategies. However, I have a lot of people who also approach me asking for tax strategies when they're not quite ready yet for an international tax strategies, meaning they're living in one place or they don't have the flexibility of moving around and decide to have a home base, or they simply want to know how locally they can reduce their taxes without going globally just yet. So in this video, I'll be exploring 7 different ways how you can reduce your taxes no matter where you're in. These 7 different ways apply to most Western countries. So make sure you stay till the end because all of them are really important and you'll be able to use them in your current circumstances. So number 1 is reviewing your current business structure. What I mean by that is most people who start earning some business income will be doing it maybe at the beginning as a side hustle. People will be freelancers or self-employed or whatever it is called within your country, a sole proprietorship, sole trader, maybe you're in a partnership, or maybe you're fully set up in a corporate structure. And why it is important to review your current structure is because depending on what current business structure you're in, you will be taxed at different rates. So usually your personal income is taxed at a higher tax rate than business or corporate tax rates are set at. So people who are freelancers, who are self-employed, earn their income in their personal name and they will have to pay personal income tax rates on that income. And as I said at the beginning, personal income tax rates are usually higher as opposed to if they were in a corporate structure, then the corporate tax rate would be lower. So it pays off to set up yourself in a corporate structure. However, that comes with a little bit of a caveat. Setting up a corporate structure comes with a bit of compliance costs, annual fees and filing fees and all of those things that you have to do in order to maintain a corporate structure. So a lot of times people prefer to stay as a freelancer or as a self-employed person until growth hits their business. However, I personally really like the people who come to me and who are ready to be set up in the most tax efficient and beneficial way from the beginning, and they're ready for growth. And then when they start earning money, they'll be earning money in a corporate structure, meaning they'll be paying corporate taxes as opposed to paying personal income tax rates on that income. Really, it is a personal choice. I also recommend working together with your accountant, sort of figuring out what you're currently earning and what the future prospect is for your business. But make sure you review your current business structure, because if you're making lots of money, you could really be paying a lot of taxes if you're in the wrong business structure, meaning if you remain as a freelancer or in a sole proprietorship, being self-employed, as opposed to as if you were set up in a correct corporate structure. Now, number 2 goes a bit together with that. Number 2, how you can reduce your taxes is by claiming your business deductions. And that is available to pretty much every business structure, meaning it doesn't really matter whether you're a self-employed person or sole proprietorship, or whether you set up as a company and you have incorporated a business. You'll be able to claim business deductions whenever you have business expenses. I've also created a freebie that I will link down below, which is a list of business deductions that you can claim as an online business. So make sure you check that out, because you want to make sure that you claim everything that you can so that you can maximize your expenses. The benefit of maximizing your expenses is that you will lower down your taxable income, and therefore you will have to pay less taxes at the end of the tax year. So don't miss out on that. Make sure you keep your receipts, your invoices, and that you keep track and that you actually know which sort of business expenses you can claim, whether it's a home office, whether it's your office supplies, your subscriptions, online courses, whatever it is that you need to run your business and that can be linked to your business, you really should be claiming as a business expense, because you'll end up paying less taxes, and that's what you want. Number 3 is make use of tax credits. Now here that's really country specific, so you want to make sure that you check out what tax credits are available within your country. And for that, I recommend, again, contacting an accountant, working together with an accountant, or checking out your tax office's website. A lot of time there's a lot of information on there as well. And in some countries, there's children tax credits available, which means if you've got a child, you'll be able to use those tax credits. In other countries, they've got educational or sort of student tax credits, which are also really handy. If you're, progressing on your education or anything like that, you'll get money back, or you'll be able to claim that expense on your taxes as well. So make sure you really have a look and do a bit of digging. Ring your accountant and ask what tax credits are available for your current circumstances. The same goes for number 4, which is making use of personal allowances. Personal allowances are very country specific as well. And in some countries, they're even interchangeable, like tax credits and personal allowances. They go a bit hand in hand. However, some countries like Australia and the UK, they have personal allowances whereby a certain income threshold isn't going to be taxed. So in Australia, it's around 18,600, the personal allowance, which means $18,000 won't be available for taxes. So that's a personal allowance that goes to you, that's income that won't be taxed and that you can use every year without having the need to be taxed on it. And it's different in the UK and in other places, so you make sure you check out what the number is and how much you can actually use as a personal allowance and not having to pay any taxes on it. Now, number 5 is to top up your retirement savings. Again, it's different in every country. There's different names in every country for your retirement savings or your pension schemes. But a lot of Western countries allow you to put money aside into your retirement savings, and that money being tax-free and putting it into your savings, retirement savings, pension scheme, without being taxed on it. A lot of times you don't really get access to that until a later point, but that money is yours and it's tax-free. So that's a plus point. That's another way how you can reduce your taxes and make sure that within the tax year, your taxable income base is pushed lower and you get to pay less taxes within that financial years. Now, number 6 is giving donations to charities. That is one tool that a lot of people like to use at the end of the financial year, depending on what sort of personal marginal tax rate they're in. So bear with me. If you're just a little bit over a certain personal marginal tax rate threshold and you would like to fall within a lower one, whatever it is, like whether it's dependent on you being taxed on 30% as opposed to 35%, then some people really like to make donations to certain charities that are approved by tax offices. For example, Red Cross, I think, is in a lot of countries on that list. So they make a certain donation to, let's say, the Red Cross, and that way they reduce the taxable income base and pay the lower marginal tax rates, which is a very efficient tool. Not only are you giving away to charities, but you're also lowering your tax base and thereby paying less taxes. Now, with that also goes what you call income shifting, meaning especially for married people or people in a partnership, they're able to shift their income to the person that earns less money, because the person, let's say you have a standard male breadwinner and the wife who's staying at home with the kids, then that male breadwinner could be giving some of his income to his wife, who's in a much lower marginal tax rate position than he would be. Let's say he is in a marginal tax rate of 40% and she would be at one of the lowest, around 18 or 20%. Then he would be able to sort of shift his income to her to push himself in a lower marginal tax rate, so push that down to, let's say, 30% and push her up maybe a little bit more, so that at the end they'll be paying way less taxes. That's also something that you want to try and figure out with your accountant, what's possible there, if there's any income shifting possible. And I hope you understand why we put those two together, as in giving to charities or donations and then also shifting that income, because it's basically the money that you've earned, but you're giving it away to someone else in order to drive your taxable income base down and in order to lower the tax rates that you'll be paying at the end of the financial tax year. So, number 7, really, really important, have an action plan. I know you hear so many things. You hear about pension schemes, you hear about medical saving plans, and you hear about how you can shift your income, but you don't know where to start. My recommendation is really to get in touch with an accountant. I know a lot of people also freak out when they hear the word accountant, and really you don't have to, because you don't necessarily have to go to, an accountant that's scary and that's gonna show up in a suit and you will be freaking out. I have encountered a lot of people who take steps and look for accountants online. They even go on Fiverr, Upwork, anything like this. So many accountants that are doing it on a freelancing basis or sort of as a side income next to their usual accounting job. So there's people out there really that you can find on whatever platform it is, whether you just Google it or whether you decide to find a more personalized approach to it through like Fiverr or Airtask or Upwork, whatever it is. Find an accountant, and really some of them, especially on those platforms like Fiverr, Upwork, they don't charge much at all on an hourly rate. And in some cases, you even get 1 hour free consultation so that they know where you're currently at and what sort of advice you're looking for. And talk to them. Talk to them about your current circumstances. Talk about the things that you maybe already know through this video, through other things of your research that you found, and come up with figures as well and make some hypothetical scenarios up. And let's say, even though you're maybe not yet at a 100k mark, you can simply come with these figures and say, set me up in the most tax efficient way, as if I was already earning 100k per year. And also your tax offices, the tax authorities. I know it sounds really scary, but trust me, behind the tax offices, there's people sitting on the other end of the phone line. So sometimes really picking up the phone and simply calling the tax office and say, hey, I need some help, like what's this tax credit? What's his personal allowance? Like, can you help me try and figure it all out? You'll be surprised how helpful actually tax officers can be. They're not just scary, they're not just there to put out fines, they're there to guide their citizens, so make use of it. So that's the action plan that I would really recommend, and then also put those actions down, whatever you need to do, whatever you can access right now, and then execute it. There's sometimes a bit of work on your side in terms of, collection of documents or some admin things, or having to reshuffle and restructure things and having to start paying yourself in a different ways. But at the end of the day, if you can save money and put that money back within your business and grow that business even more, you'll be really grateful that you have done an action plan and executed on it, and it doesn't have to be scary at all, because it's available out there for everyone, and the faster you can access, the better for you, your business, and your money growth. So I hope those 7 different steps of how you can reduce your taxes have helped you out, and let me know whether they're accessible in your country or not. I have an international audience, so it's always a bit challenging to do these videos that are very general, but I know that you'll be able to have and make the most out of these 7 different ways of how to reduce your taxes. Thank you so much for your time. I really hope you enjoyed this video. If you've learned something, give me a thumbs up, share with someone else who could learn a thing or two about how to reduce their taxes, and I'll see you on the next video. See you guys!